Hey, this is Justin with daytradethemarkets.com. It is Wednesday the 8th. We had a really nice rally here the second half of the day. I wanted to talk, kind of hone in on the key moments right in here where we really saw a nice reversal pattern set up, and then talk about kind of the after effects of the FOMC right in there. And then I think I just saw where Dave emailed me that I think he took a live trade right in there. So I'll include that video as well. So he got long right in there. So I know this is it's kind of jumbled up. I want to zoom in on this, but just to give a little bit of a background, heading into the day, our bigger picture bias was more down, but we really wanted to see what the market could do below this zone that I've got indicated right there. If the market could really gain a lot of acceptance down here, that would be a pretty bearish indication. And then if it could also get below, what was it, 18 quarter, I think, right in here. Yeah, that's 18 quarter right there. That was kind of our last little line in the sand as well. But really what we wanted to focus on heading into the day is could the bears get some acceptance below this level right in here, okay? And so that's why I want to kind of zoom in here on this portion early on and talk about the pretty key reversal type of a pattern that we saw, and then we'll talk about the move after the FOMC notes, or minutes I should say. So let me zoom in on this area right in here, and let me extend this to make it look reasonable. But you can see, again, this was our key area, this zone right in here. And the first time through, we did it with some pretty strong selling aggression. This is a level 3 selling aggression bar that had immediate follow through, right, below, at least below this high velocity move. Came right up there and sold off right to our next level down at 18 quarter. And so that's a pretty bearish indication. However, we did have trouble getting through 18 quarter, and then we started to get a little bit of buying, some level 2 buying. Again, that's nothing to get too concerned about. What we really want to do is see if these bears can really maintain and find acceptance below this 2550 to 24 area here. And you can see that we tested right into that area, came back down and hit the low of this level 2 bar, and then when we tested it again, we shot through it with this level 3 buying aggression bar. So again, this is our key level right in here, this key zone. We have this level 3 selling aggression bar right here that when its high was taken out was done so with a level 3 buying aggression bar. So it's showing us pretty good rejection of these prices down here, which again was our pretty much our line in the sand if these bulls, were going to step in at all. This was kind of their last chance to do so. And as it turns out, they did so pretty ferociously. So let me kind of go back out. Okay, so here's the next portion. Again, here's that bar that took out the higher level. We came back down toward the low of that bar, pushed back up, found some consolidation, which is not surprising, ahead of the FOMC. And so then you can see that we broke out right above, or we broke out right prior to the FOMC notes right in here around 1:45 Eastern and took out this next level at 36. And then let me zoom in a little more even here. You can see right when, let me zoom in here. Thanks for hanging with me. This is not my greatest video of all time. Sorry about that. Anyway, this is the, right here is right when the notes came out. So we had this high velocity move made by buyers, followed by a level 3 bar made by buyers, and then the quick reaction, which you're often going to see around news, which was this attempted push lower with this level 3 selling aggression bar. So right when this news came out, this is interesting to see. You've got this level 3 buying bar and then a level 3 selling bar within it. That's setting up a pretty nice little battle, if you will. We call these mini battles. We want to see can the low of this hold, or can the high of this hold, or do we get follow through, or do we get follow through? In this case, it was pretty clear that very quickly we got follow through above the high of this little mini battle. We did so with a level 2 bar, and I believe this is where Dave's long got in right in here, and I'll post that video shortly. I just saw an email where he sent me a live trade video that he did from later this afternoon, and then you can see here that we just continue to move higher, get through this level between 48 and 52, come back and actually test right to the low of this level 3 bar. So whether you just bought the level 3 bar on the market, which was a little risky because it's right into the resistance, or waited for the retracement down toward the low of that bar, pretty sensible that you want to be getting long. And then again, it just continues higher to our next level higher, which was around 62 quarter there. So and then we closed here. We had a little bit of back and forth toward the cash close, but that's a pretty good, pretty good example there of kind of a nice reversal pattern. Again, if I'll make this a little bit bigger so we can see the whole day, really nice reversal pattern when the market failed below this level and busted out with this level 3 buying bar, and then had another breakout with these level 3 buying bars, and here was where the news happened. So hopefully that makes sense. Just wanted to talk about kind of that key turning point or key reversal point that we had there. And again, sorry for jumbling my words a bit during this video, but hopefully you got the gist of it. Let us know if you have any questions on that, and we will talk soon. Thanks.